We're here with Northern Trust Chief Economist Carl Tannenbaum. Carl, great to see you.
Good to be with you.
So at the beginning of 2016, most Fed participants said they were expecting a 1% rise in short-term interest rates. That clearly hasn't happened. What's the story?
Well, first of all, the economy hasn't performed up to expectations. We had a fairly slow first half with GDP expanding only by a little more than 1%. Secondly, we had some international incidents that caused the Fed some hesitation. We had a Chinese market correction at the beginning of January, and we had the Brexit referendum in late June. And finally, the Fed's made it clear that they want to err on the side of caution. They view the cost of waiting as being much less than the cost of acting too soon, and so that's left them on hold for most of this year.
There are some voices out there saying that these missed forecasts have hurt the Fed's credibility. Would you agree?
I wouldn't. I think if you're not sensitive to current circumstances and adjust your policy accordingly, that's when you lose credibility. The Fed has always said that they are data dependent. The Fed has always pointed out that there are risks to the outlook that they need to account for in their decision making. And as we've just described, those risks presented themselves in a very real way and caused them to be hesitant. The Fed has always tried to cover their communication with that caveat, but some are not listening to it.
So would you say the Fed is providing a clear signal to markets?
I probably wouldn't go that far. From when I first started following the Fed 30 years ago, they would say almost nothing. You had to guess at their action through market trading. Today, we've been treated to minutes, statements, press conferences, projections, and a multitude of speakers, many of whom contradict one another. So in some ways, while we craved more communication, now that we have it, it's more difficult than ever to discern what's really on the Fed's mind.
If you had the power to do so, is there anything you would change about the Fed's communication strategy?
I'd offer three suggestions. First, when there are going to be a series of Fed speakers out, I'd hope that they'd huddle at their formal meetings, and if there's a clear message that they can all emphasize, it would be a lot clearer to markets. Secondly, I'd like to hear a little bit more about their inflation target. What does it mean? Is 2% a ceiling? Is it something to be averaged or something different? And then finally, I'd like to have a press conference at the end of every Fed meeting. It's thought that the Fed wouldn't move at a meeting unless there was a press conference, so this would remove a lot of the suspense about the timing of Fed actions.
Carl, thanks for joining us.
My pleasure.